Hello everyone, this is Jordan at PureElliottWave.com here with you for a free video on the Australian dollar. Recently, over the past week, we've had some movement that invalidated the main wave count and potentially completed primary 2 to the downside. So today I actually have two alternate counts for you, one expecting downward trend to continue and one expecting that primary 2 is over with bullish price action to continue. And there are some key levels to watch currently. When those levels are hit, then we'll have further confidence whether we should go with the main or the alternate count moving forward. Also, if you like our analysis here, consider subscribing to our live analysis. We have the S&P 500 and the Euro Dollar Daily with gold to be released every day of the week coming up shortly. We also have Bitcoin and oil that are released once a week as part of our subscription services here. So with that being said, let's jump into the charts. For the bigger picture at the super cycle degree, we're looking at a triangle unfolding, A, B, C, D, E, for a contracting triangle where each wave is shorter than the last among C, D, and E waves. This is also a running triangle because B goes beyond the start of A. And you can look at our previous video for a little bit more in-depth reasoning for why we chose this structure. But basically, we're looking at the bottom of this supercycle C and going up into a large bull market with a target of 1.04438 and for D to retrace the same amount that C retraced of B, as it often works in these fractals. On the monthly chart, we're looking at this area here, coming down into supercycle C. Monthly chart remains the same, coming down as a W, X, and Y cycle degree for supercycle C, and going back up A, B, C at cycle degree for supercycle D. Invalidation for this upwards movement sits below at 0.55098. And on the weekly chart, we'll take off from primary W here. Here we have primary W going down into cycle B and subsequent price action for primary 1 and 2. Now, the difference between our main and our alternate count, which you'll see shortly, is that one sees primary 2 continuing lower and the other sees primary 2 complete right here. So currently this is the main wave count, and we'll have a lower probability of success if this line is breached on the daily chart with a candle above and not touching this line, or the invalidation for the double zigzag is broken, which you also see on the daily chart right at the top of intermediate X here. So this one has a higher probability until this Elliott channel gets breached, because the weekly technicals aren't giving a signal that the downward trend is over. However, the daily technicals are showing that a little bit more upwards price action is likely. So we're having some conflicting signals there, so it's very important to watch these key levels that I'm about to outline for you. In the scenario with more downward price movement, we have a target for intermediate Y to reach equality with intermediate W here, and that would be at 0.62253, which would be right about here where the line comes down, so much further down to go. On the daily chart, we'll take off from the top of primary 1 here and look at this in much more detail, and I'll give you those key levels. This is the top of primary 1 going into primary 2. You can see a WXY zigzag in this scenario with the Elliott channel surrounding recent price action. The short-term invalidation for this count sits just above at 0.68182, and at this level, the B wave in a zigzag would move beyond the start of the A wave, which is not allowed under Elliott wave rules. Price currently sits at this best fit channel, so we should find out which count is more likely very shortly, and you can see that same target I had below for intermediate Y to complete primary 2. Now let me show you the weekly alternate scenario. Here's our other weekly scenario. You can see the W, X, Y for cycle B complete here, going up into primary 1 and 2. And this count sees primary 2 complete at the recent bottom last week, and primary 3 underway. So this would be an extremely bullish count, because if you're familiar with Elliott wave theory, you know that the third wave is often the sharpest and has the most price momentum to it, going upwards. In this case, we have a target for primary 3 to reach the 1.618 extension of primary 1 measured off the bottom of primary 2. That gives us a target of 0.80565. The invalidation for this count sits much closer at 0.64587, and that is where the second wave in this new impulse would move beyond the start of the first wave. On the daily chart, we'll take off from the top of primary 1 again. This is the top of primary 1 here, going down into a 1, 2, 3, 4, 5 for intermediate A, regular flat for intermediate B, and an impulse wave 1, 2, 3, 4, 5 for intermediate C. And it should be noted that this retracement did reach the Fibonacci 618 ratio, which is common for zigzags in a wave 2 position. Since the bottom here, we've had some very sharp movement upwards, and it has recently stalled at the Elliott wave channel. Again, if we see a daily candlestick above and not touching this Elliott wave channel, this will be the primary wave count that sees primary 2 over and primary 3 underway. I went in a little closer and I viewed this impulse on the 4-hour chart, and it looks like we have a good 5-wave structure ending at the top of this candlestick, so we may see some corrective action for minor wave 2 shortly. Now let's move on to the daily and the weekly technicals. This is the weekly volume data. You can see the past 2 weeks have had overall decreasing volume, which isn't something you'd like to see for a strong bullish movement either way, but it is common for volume to be weak at the beginning of a new trend. Money flow had that double bullish divergence where price made lower lows, but money flow made higher lows. And we could see the fruit of that potentially with a trend reversal on the Elliott wave counts. Unbalanced volume has been trading in this tight range since early 2023 and has not yet broken out. For the rest of the weekly technicals, you can see resistance far above at 0.7150, support below at 0.6200. We're smack dab in the middle of that. 200-day moving average still sloping down. ADX showing no clear trend. RSI is neutral. Stochastics are returning to neutral. ATR is overall decreasing with bearish price movement, and we're showing no reliable correlation with the US dollar index. In my opinion, the weekly chart here supports the main wave count with more downward momentum expected. We haven't gotten a good candle reversal pattern. We haven't reached any meaningful support or resistance at this time frame. There's no clear trend, and stochastics did reach oversold, but our model with no clear trend should have support or resistance being hit simultaneously with stochastics reaching oversold before we'd expect a major trend reversal such as this. On the daily technicals, you can see the volume overall has been decreasing with the new bullish trend upwards. Money flow had some longer term bullish divergence with price making lows and money flow making highs, which was realized here with a short-term bullish uptrend following that. Unbalanced volume is still trading within this range here. For the daily technicals, you'll see this somewhat supports the alternate wave count with the bounce expected. You can see we did break down this resistance, which is shorter term resistance, really only visible on the daily chart here at 0.6615, above at 0.6800, and the moving averages overall are bearish, with price trading above the 13, below the 50 and the 200, and the 50-day sloping down with a 13-day sloping up. We had a morning star reversal pattern at the bottom, which has given us bullish price movement. ADX is showing no clear trend. RSI neutral. Stochastics are entering overbought. They did reach oversold at the bottom and are now entering overbought. ATR is increasing with the bounce, and there's no statistically significant or reliable correlation between the Australian US dollar and the US dollar index visible here. This chart does show the market has a little bit more to go, with ADX indicating no trend and stochastics now entering overbought. Price could reach this 0.6800 resistance area before we'd see a pullback according to that model. So overall, the dailies support the alternate wave count, with primary 2 being over and a large bull market just starting out, and the weeklies show there could be some more downside. So in order to decide between the two, keep a close eye on those levels that I mentioned in both of the Elliott wave charts, the main and the alternate. We'll see what happens moving forward. This has been Jordan Marshall with Pure Elliott Wave. Thanks.